We can look at the data and we can look at the numbers, and there does seem to be a correlation between countries that are receiving greater rollouts of the vaccine, a la UK, a la United States, and how investors perceive their economies and their stock markets.
Yeah, absolutely. As you said, that vaccine rollout is such an important number to be watching because it's going to give us an indication of when we can expect economies to be able to reopen, and therefore when we can expect to see that recovery that everyone is expecting. And as you said, the US and the UK are doing pretty well. Europe is lagging, but I have to say we have got some hopes that just as we've seen in most countries, that you'll start to see an acceleration of that rollout. Europe had a really slow start because it had struggled to approve quickly logistics. It came across a number of supply shortages, but hopefully over time they should get up to pace.
And you wonder what I want to call it the vaccine economy, Seema, because I traveled last week to South Carolina. I noticed that there were a number of elderly and senior citizens on my flight. I asked one woman who's in a wheelchair. I was well away, well masked up. Don't worry. And I said, have you been vaccinated? And she nodded. And I said, she's going to see her family. And I thought, I wonder what this boom in this vaccine rollout is going to be as people feel more free to get out and travel. And that plays into economic growth and corporate earnings and hotels and restaurants. It could have this huge ripple effect, could it not?
It could be absolutely huge, as you said. This is the most important thing to watch for this year. If we were to get any kind of severe shock with regards to vaccines, it puts the whole thing under question in terms of the economic recovery that we're anticipating. What we should see is that if economies start to reopen in Q2, as we are expecting, then you can see a release of all that pent-up demand that we've been seeing over the last year starts to be released, and you get a surge in services. All the sectors that have been really beaten up should perform better. But I think we still have to have an element of caution here because, we're still not going to see herd immunity being achieved until at least late this year in a number of these advanced economies. So the high human-to-human contact sectors will still be facing restrictions.
To be fair, we don't know that. In fact, I've sort of committed that I'm not going to use the term herd immunity because we don't know the denominator. We don't know how many asymptomatic cases have been out there. I don't want to get into a medical conversation. Certainly, I'm not qualified to do that. But is it tough to make specific time frames based on projections where we don't actually know the math? I guess that's my only point.
Yeah, absolutely. And that means that there's a huge amount of uncertainty in the outlook. So when we look at the way that the market is reacting at the moment, there is a lot of optimism about what can happen. But as you said, there is uncertainty and investors need to maintain a little bit of caution. And that's actually one of the reasons that we have picked still some defensive sectors in our allocations.
Like what? What do you like right now? Very quickly, what looks still attractive from a valuation? Everything seems like it's in a melt up.
It is. And as you said, look, everything is expensive and it'll be a surprise, but we still like big tech. And the reason is the stay-at-home trade, it's not going away anytime soon. And a lot of these companies have suffered, which is going to keep on delivering as the years progress. And that's one of the reasons we still are maintaining an allocation to big tech.
Shepard Smith here. Thanks for watching CNBC on YouTube.